Welcome to our investment series on ETF or ETP. Today, we are very honored to have CSOP's Barbara to share some insights and knowledge on leveraged and inverse ETF. Nice to meet you, Barbara.
Hello, Elton.
Nice to meet you, yeah. I understand CSOP is a leader in Hong Kong's so-called L&I leverage and inverse ETP market. Can you let us know what is this L&I in general?
So I think investor may not always heard of our company name CSOP, but they are quite familiar with our products like 7200, 7500, 7226, and 7552. So we are very happy that investors are keep using our L&I products, especially during the volatile market times. And we can see our L&I market shares actually by the end of August 2022. So August this year, our market share by average daily turnover, it's actually raised to 98.7%. And if by market share by AUM, we also had an increase to 94.2%. So even though market may not be doing very well, but we still have some products for clients to catch the rebound or do some hedging.
I see. By the way, I understand L&I product has different category, or they follow different underlying or asset class. Can you let us know from CSOP's suites of L&I, what type of indexes or asset you are following?
As investor may notice, the L&I usually starts with 7. And how do you identify if they're leverage or inverse? So by looking at the ticker itself, the number itself, you can see 72 start with 72, like 7200 is actually leverage 2 times. Start with 73, it's inverse 1 time, and 75 is inverse 2 times. So Elton just mentioned we have different indices or different sectors we follow. For example, 7200 is actually the Hang Seng Index leverage 2 times. Apart from all the big indices, like in Hong Kong, we track the HSI, HS Tech, and also the HSCEI. And for A-shares, we also track the FTSE 50 and also the CSI 300. And apart from the Hong Kong market and A-shares market, we also have a pair, the Nasdaq L&I, which is quite attractive these days because of the Fed rate hike. So apart from all the different countries, we also track some of the commodities like oil and gold futures. So I think these provide investors different category or different choices they can put into their portfolio for short-term trades.
I see. Well, certainly CSOP is the leader in Hong Kong's L&I market. And by the way, can you let us know a bit more on how this L&I actually works behind? I mean, how they get the leverage or inverse return? What kind of investment they are holding actually?
So unlike some of our ETF, which is buying stocks as an underlying, so using the L&I, because you need to have the leverage or inverse effect, so we would need to use futures or swap as the underlying. But not 100% of the AUM is invested in those derivatives, because using L&I is different from just buying futures itself. It doesn't expose to that amount of high risk exposure. So investor can use a smaller amount and to invest into a leverage effect or some of the hedging tools. But of course, the leverage effect will not be as big as using futures itself, but it's also minimize investor risk. So if investors are interested, they can also look into our CSOP website, because some of our products use swaps and some of them use futures. They're all listed on the website. You can just go and check and see which indices or which futures they are tracking.
And in the market besides L&I, actually investor can capture leverage or inverse return by futures or CBBC or covered warrant. Can you briefly let us know how do you compare different kind of vehicle to get the leverage or inverse effect?
So as we mentioned, for futures, you got higher risk but also higher return. I think it's same for all other derivatives. L&I products, usually you can see the maximum we can do is just 2 times leverage or 2 times inverse. But some of the characteristic different from warrants or CBBC is that there is no knockout features, knockout mechanism, no time frame. So we've got no maturity date, and also there won't be any implied volatility or any time decay. But we for L&I products, we can call it a compounding effect. If investors are holding an L&I product for a certain period of time, like several days, but the market is very volatile, like going up a day, going down a day, that will make the product itself cause some of the compounding effect. Therefore, you should pay attention to the compounding effect, so you can see holding for a longer period of time. If the market doesn't go in your way or it's a bit volatile, and it may cause investor to lose their money. So this is a point that investors need to pay attention to.
Yeah, exactly. Remember that point is we call it the multiplying effect is for daily only. Yeah, understand. And by the way, let us just give our audience 2 examples. This counter is a 7226. This is following the Hang Seng Tech, and this is 2 times positive direction ETP. And now the stock price is around $5, and the lot size is 100 shares. So the minimum investment amount is only $500.
Correct.
And then for another one, start from 75. You just taught me is minus 2 times.
Yeah.
So 7552 is a Hang Seng Tech bearish 2 times. And the stock price now in September 2022 is around $12 per share, and the lot size is 100. So the minimum investment amount is around 1,200.
Yeah.
And lastly, if investors want to know more information about all the CSOP, L&I, where can they get the information?
So investor can always go onto our CSOP website to check what indices we have to do the L&I, to do your catching the rebound or do some hedging. And on our website also shows some of the NAV or also past performances can be found. And also I think of course you can go onto Philips Securities, the app. You can check all the stock price and the lot size and all the information you need.
Yeah, thanks for Barbara's time.
Thank you, Alfred.
Grateful to have you here today. Thank you.